Hey there, friends. Professor Best here. And today we're diving into a topic that's crucial for anyone looking to build wealth through investing: dividends. Did you know that nearly 80% of S&P 500 companies paid dividends last year? That's a significant opportunity for investors like you. In this video, I'll show you how understanding dividends can help you not only earn regular income, but also make smarter financial decisions that support your long-term goals. So stick around, because by the end, you'll be equipped to evaluate and leverage dividends effectively in your investment strategy. Let's jump right in. Here are 5 key insights about dividends that can enhance your investing journey. First up, let's talk about what dividends really are. Dividends are cash payments from companies to their shareholders, representing a slice of their profits. Think of them as your reward for owning a piece of a company. Look for companies that consistently pay dividends. They often indicate stability. Be cautious of companies offering extremely high dividends. Sometimes they're too good to be true and could signal financial trouble. Imagine you invest in a solid, dividend-paying company like Coca-Cola. Each quarter, you receive a cash payout that you can either spend or reinvest, boosting your potential returns over time. Next, we have dividend yield, a critical metric for evaluating dividend stocks. It's calculated by dividing the annual dividend by the stock price. A yield of around 3 to 4% is generally considered good. Pay attention to the sustainability of that yield. A company with a high yield but declining profits may not be a safe bet. Let's say you're considering 2 companies. One has a yield of 5%, but its profits are dropping, while the other has a 3% yield but is growing steadily. Choosing the second company might offer you more long-term security. Now, let's discuss dividend reinvestment. Instead of taking dividends as cash, you can reinvest them to purchase more shares of the stock. This strategy leverages the power of compounding, which can significantly enhance your investment growth over time. Ensure the company you're reinvesting in has a solid growth outlook. Otherwise, you could be compounding losses. If you invested in a company like Johnson & Johnson and opted for dividend reinvestment, you'd gradually accumulate more shares, leading to larger payouts in the future as the company grows. It's also essential to consider how dividends are taxed. Ordinary dividends are taxed as regular income, while qualified dividends may be taxed at lower capital gains rates. Be strategic about when to take dividends based on your tax situation. Failing to understand the tax implications can erode your returns, especially if you're in a higher tax bracket. If you hold stocks in a tax-advantaged account like an IRA, you won't pay taxes on the dividends until you withdraw them, potentially maximizing your returns. Finally, let's address some common pitfalls in dividend investing. Many investors chase high yields without examining the company's financial health. Always assess the company's payout ratio and dividend history before investing. A high payout ratio can be a red flag. It indicates that the company may be paying out more in dividends than it can afford. Consider a company that has consistently raised its dividends over the years. This shows a commitment to returning value to shareholders and typically signifies financial stability. Now that you've got a solid grasp on dividends, let's go a bit deeper. Remember to diversify your dividend stocks across different sectors. This way, if one sector struggles, others might thrive, stabilizing your income. And one common question I hear is, how do I start generating a steady dividend income? A good rule of thumb is to invest in stocks with a mix of yields, aiming for a total yield that fits your income needs. Now, I want to hear from you. Have you invested in dividend stocks? What's been your experience? Drop a comment below. And if you found this information helpful, make sure to subscribe for more financial insights from Best Advisors. Also, check out bestadvisors.com.au for deeper content and resources. And don't forget, if you're unsure about your financial journey, seeking professional advice can make all the difference. To wrap up, remember these key takeaways. Dividends can provide a steady income. Reinvesting them can amplify your growth, and understanding the associated tax implications is crucial. By integrating these strategies, you're building a solid financial foundation for your future. Stay curious and informed, and explore more content on bestadvisors.com.au. Until next time, happy investing.